Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of how to start investing in electric vehicles, opportunities, key players, and risks. Shifting investor preferences. Investors are not just chasing profits, they're chasing purpose. There's a rising trend toward ESG, environmental, social, and governance. Investing, and EVs fit squarely into this framework. The notion that profit and planet don't coexist is fading, making EV investments a win-win for many portfolios. Why is ESG gaining traction? Regulatory pressure. Companies are being held accountable for reducing their carbon footprint. Investing in EVs aligns with these sustainability goals. Consumer expectations. People are choosing brands that prioritize sustainability. Investors see this shift and follow the money. Long-term returns. Firms prioritizing ESG factors often outperform in the long run because they address risks tied to environmental and social changes. And here's where EVs add extra appeal. This isn't just a sector that checks the ESG box. It's a transformative industry driven by innovation and future-focused goals. More funds, like green energy ETFs or clean transportation mutual funds, are allocating significant percentages to this space, signaling strong conviction in its prospects. Investing in EVs now isn't just a smart move to ride the market's momentum. It's also a chance to align with broader societal shifts shaping the future of business and the planet itself. Key players in the EV market. The electric vehicle market is growing rapidly, but not every company is driving change at the same speed. Some automakers are mainstays, others are disruptors, and then there are the essential suppliers powering the entire ecosystem. For investors, understanding the key players in this space is crucial to identifying opportunities in this competitive and highly innovative industry. Established EV automakers. When it comes to EVs, a handful of major companies have already carved out significant market share. These brands are setting the standard for technology, production scale, and consumer trust. Tesla. Tesla isn't just a household name, it's the face of the EV revolution. With a commanding lead in the industry, Tesla's cutting-edge battery technology, proprietary charging network, and focus on software innovation make it a cornerstone of the EV market. The company's global market share remains strong, bolstered by models like the Tesla Model 3 and Model Y, which consistently rank as top sellers worldwide. BYD, build your dreams. Hailing from China, BYD is a major player not just in EV production but also batteries. Supported by strong government backing and a rapidly growing domestic market, BYD leads in volume production. It's one of the few automakers able to compete directly with Tesla in terms of scale and reach. Legacy automakers transitioning to EVs. Companies like General Motors, GM, Volkswagen, and Ford are not sitting idly by. GM aims to completely transition to electric by 2035, while Volkswagen already has its ID lineup targeting mass-market consumers. These companies benefit from decades of manufacturing experience and global infrastructure to produce EVs efficiently. These established players aren't just competing with each other, they're shaping the landscape, making it harder for smaller companies to enter the fray without something truly groundbreaking. EV startups to watch. While automakers like Tesla and BYD dominate now, the future may belong to today's underdogs. These startups are shaking up the industry with bold ideas, unique technologies, and a focus on niche markets or untapped opportunities. Rivian. Specializing in electric trucks and SUVs, Rivian has positioned itself as a leader in adventure-focused EVs. There are investment strategies for EVs. Investing in electric vehicles, EVs, opens up a myriad of opportunities, whether you're targeting established manufacturers or exploring innovative startups. Different strategies can enhance your portfolio while aligning with the growing demand for sustainable transport. Here's a closer look at 3 key investment avenues. Stock investments in EV companies. Investing directly in EV companies can be a rewarding strategy. As the market evolves, both established manufacturers and emerging players are offering unique opportunities. Established manufacturers, companies like Tesla, Ford, and General Motors are leading the charge. They have the infrastructure, experience, and consumer trust that can translate to stable growth. Consider how their ongoing investments in EV technology can affect their long-term value. For instance, Tesla continues to innovate with battery efficiency and autonomy, making it a strong player. Emerging players. Don't overlook smaller companies that are making waves in the industry. Rivian, Lucid Motors, and NIO are gaining attention for their niche models and commitment to sustainability. The potential for rapid growth can make them attractive investments, especially if you're willing to take on a bit more risk. When selecting stocks, it's essential to conduct thorough research. Look into financial health, competitive positioning, and future growth prospects. Ask yourself, does this company have a solid strategy for navigating the EV market, ETFs, and mutual funds? If you prefer a more diversified approach, consider investing in ETFs, exchange-traded funds, and mutual funds focused on the EV sector. These funds pool money from multiple investors to buy shares in several companies, which can help spread risk and provide exposure to a range of players in the market. Benefits of diversification. Investing through funds can dilute the risk associated with individual stocks. If one company falters, others in the portfolio may still perform well. This strategy can be particularly appealing in a rapidly changing market like EVs. Tracks industry performance. Many EV-focused ETFs track the performance of the sector, giving you insight into overall trends and movements. Funds like the Global X Lithium and Battery Tech ETF or the First Trust Nasdaq Clean Edge Green Energy Index Fund are examples that capture a broader segment of the EV ecosystem, including battery manufacturers and infrastructure developers. By choosing funds that align with your investment goals, you can gain exposure to the entire electric vehicle landscape without the need to research every single company. Private equity and venture capital. Investing in smaller, innovative EV startups is a compelling option, especially if you want to get in before these companies go public. Private equity and venture capital can offer exceptional returns if you pick the right companies at the right time. Emerging startups. Many smaller companies are developing next-gen technology in battery design, EV charging solutions, or autonomous driving. Investing in these firms can provide early access to groundbreaking advancements that larger companies may adopt later. Higher risk and reward. While the potential returns can be substantial, these investments also come with higher risks. Many startups may face challenges related to production, market demand, and competition before achieving success. Assess the company's business model and evaluate their growth potential before diving in. Investing in private equity requires a keen eye for innovation and industry trends. Ask yourself, what unique advantages does this startup offer, and how does it fit into the broader EV ecosystem? In summary, whether you opt for direct stock investments, diversify through ETFs, or explore the thrilling world of startups, understanding these strategies can help you navigate the evolving EV landscape effectively. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.